When Mark asked us to talk about contemporary developments in income tax and taxation of land, I thought, well, I'll get Stuart to do the income tax, and then there's not much to say about land because there isn't much of a contemporary debate about it, and there certainly isn't much of a contemporary tax on land. And as it turns out, I think I've probably got the harder end of the stick because there's actually some quite difficult things to try and get across here. The first easy thing is that actually the arguments for the taxation of land are just as strong as they ever were. Taxing land value is a tax on an economic rent. It's a non-distorting tax. I can't put it quite as well as Lloyd George, but the gains to value accrue through no effort of the owner. And if you're interested in redistribution, land is also held very unequally. But there is no land value tax in the UK. There have been attempts to tax the uplift in land value in the 3 years earlier quoted, which I don't have quite to the top of my mind, but quite a discussion in the Barker Review about why those failed. So is there any point, actually, in continuing this discussion? We've had 100 years of not doing it. I don't think I'm revealing anything, Mark, if I say that when I was at the Treasury, I don't remember it being at the top of the agenda for analysis or debate. So is there any point in still discussing this? Well, one answer to that is, well, actually, we do, at one level, tax land value. In fact, we get £50 billion from combined taxation of property and the land on which it sits, from council tax and business rates. And just to understand what that means, a little council tax banding is such that properties in the south of England and London are in much higher council tax bands on average than those in the north of England. That's not largely to do with the quality of the property, that's largely to do with the value of the land on which these houses sit. So you can see that to a large extent the council tax is actually a tax on land value, but of course it's a tax on combined land and property values. And that, well, this is an interesting quote from William Vickery, of course a Nobel laureate. He says, the property tax is, economically speaking, a combination of one of the worst taxes, that part's assessed on real estate improvements, and one of the best taxes, the tax on land or site value. Now, I'll come on to kind of a couple of issues with that, because I think there are cases in which tax on property, i.e. improvements, isn't such a disastrous tax. But you get the idea. What we have done is we've combined a tax on land with a tax on property. And actually, to get this right, I think a lot of the debate doesn't quite distinguish these things. We need to think about business land, business property, domestic land, domestic property, and actually how we think about taxing those things is different. So let me start by saying a little about business property. Tax on business property just distorts decisions that firms make about inputs. It violates some of the most basic, as it were, principles of economic theory when it comes to talking about taxation. It taxes an intermediate input, and that's an inefficient way of raising revenue. And business rates are just one example of how you can do this and how they create incentives, and just some of the sorts of incentives that they can create. Some of these I just Googled business rates, and I mean, I can't remember something, but anyway, these are the headlines that came up on I think the first three things that I saw. It's a very clear example of the way in which if you're taxing the value of the property, then arguably there's an incentive not to build a property or to not knock it down, which I suspect isn't a huge issue, but it gives a sense of how these incentives might operate. Clearly, if you're taxing the value of the land, then none of those incentives operate. So the economic kind of case is obvious. The issue is such a change practical? To which I can't give a definitive answer, but it's worth just being clear about what the problems are and whether there are solutions. Most market transactions, I mean, the fundamental problem is that most market transactions are for land property packages that certainly in the domestic arena, and to some extent, certainly some areas in the business arena, the market in land is relatively thin. That may making determining land value relatively hard. And because it's hard, it's controversial. It's certainly not impossible. It's doable, but it's controversial. And land values are often quite volatile. On the other hand, we're not starting from a world in which no one does it or no one's ever done it. Land value taxes, whilst not vastly widespread, certainly operated for long periods in some parts of the world. It's not as if we don't have a kind of fairly substantial apparatus in place to work out values of business properties and others at the moment. The Valuation Office Agency already employs 4,000 staff. It's got data on the 1.7 million non-domestic properties. The Land Registry has pretty good data on what property and land is owned. I don't know the answer to the last question, but it's not obvious to me that the answer is yes, it would be that much harder. And it's certainly not obvious to me that yes, it would be impossible. I don't think. I mean, I'm persuaded actually that the problem is not fundamentally a technical problem, although there would be technical problems in levying a land tax. There's certainly scope, at the least, for more work on that. So, moving swiftly on to domestic property. In a way, the economics around business property is pretty straightforward. I mean, the practical stuff might be quite hard, but the economics is pretty straightforward. The economics around domestic property, I think, interestingly, is quite a lot more difficult. That's because there are three things that you need to think about when you're thinking about domestic property. The first is that it has a consumption value. We pay VAT when we buy a fridge. We don't pay VAT when we buy a new house. Partly that's because houses tend to last for quite a long time. And actually the appropriate thing probably to do might be to tax the flow of consumption services like we tax any other consumption. So there's a consumption aspect to housing. As obviously it sits on land, so there's a land value tax issue. Property is also incredibly important part of the store of value and of savings that we have. So we need to think about taxation of domestic property in all of these respects. So how do we currently tax domestic property and land? Well, we have a council tax based on property valuation of 20 or so years ago. It's a tax that's regressive in property value. That is, the tax rises less than proportionately with the value, and it's capped. Though we know that Vince Cable, kind of economically appropriately, wants to get rid of that cap. There's no VAT on new housing or on the service flow from housing. Stamp duty is paid on the purchase of property in bands which cause jumps in liability. And neither imputed income from owner occupation nor capital gains are taxed for owner-occupied property, but they are taxed effectively for rented properties. So actually, it doesn't really meet taxation of property at the moment in terms of thinking about the taxation of the consumption flow. Well, the council tax is the nearest that we've got to that, but it's not ever so near. Stamp duty doesn't fit into any rational kind of discussion of the taxation of anything. And in terms of the taxation of saving, well, there is a huge difference in the way that owner-occupied housing and property that's rented out are taxed, and that creates a number of distortions in the housing market. Also, there are distortions in the savings market. Now, of course, we all understand why we end up somewhere like this, because it's politically difficult to do things very different from this. But nevertheless, I think it's actually rather important to understand where ideally one might want to end up. So, thinking about the consumption tax issues, as I say, the council tax sort of approximates the value on the tax on the value of housing. sort of, an ideal system would simply have a proportional tax on the consumption value. In other words, a proportional tax on the value of the property. We reckon that something of about 2/3% on value would replace council tax on a revenue neutral basis. A bit higher than that, and you could replace stamp duty as well. This doesn't get round some of the double taxation of improvements problems. If you kind of make your house more valuable by putting an extension on the back, you pay VAT on the extension, and then you would be paying more on the you would be paying double under this kind of system by paying the consumption tax, exactly as the council tax would operate if it was ever revalued. This is where it's worth thinking about land as well, because in principle it's possible to break out the land part of the value of the property and tax that at a higher rate and tax the relative to the actual improvement. Whether that's that I think is genuinely more difficult than for business property, partly because there are just an awful lot more houses. But again, not obviously impossible. If you were to move to this housing services tax, say at 13%, so we're basically saying we want to replace council tax with an entirely proportional tax. If you do it at that level, what you find is it's essentially only the housing in the top two bands where people pay more, and in the bottom bands people pay less. Now those are obviously, you need to kind of the scales gone. I'm not sure how the scale's working here. That doesn't look right. Anyway, the top. This must be. This is prices in 1991. I think is why it looks like that. So the point is there actually aren't very many houses up on that right-hand side. In the top two bands, I think less than 1 million, and then everyone else down there would gain from this change, but obviously big losses for people with relatively expensive houses. So this is just a kind of one example of the sort of thing that you could move towards. But again, it's entirely understandable why this is politically difficult. So that's kind of thinking about housing from a consumption point of view. What about a savings point of view? There's a lot of savings, a lot of wealth tied up in housing, about £4 trillion, which is quite a lot of money, and is about equal to all financial savings. So there's financial saving, and there's what the household sector holds in savings, and there's what they hold in housing, and they're about equal. So it's kind of very big. And we know that returns to housing are variable by time and location. I mean, you can see how the blue line is actually kind of how house prices have increased. The black line is the trend increase. At the moment, we're not. The tax man isn't getting his hands on any of that, and the result that people who are lucky are not being taxed on their luck. People who are unlucky are not getting any rebates equally. And there's big differences between regions. House prices in different regions have risen at very, very different rates over the last 20 or 30 years or so. And actually any rational taxation of savings, even if you don't want to get hold of the normal return to holding savings, you do want to get hold of the supernormal return, which certainly some owners have got. So currently all returns to owner-occupied housing are free of tax, no tax on imputed income, no tax on capital gains. What would be a neutral form of taxation of housing, which was actually closer to an expenditure tax? Well, you would actually want to tax capital gains. Now, I don't think you could, because for the same reason that we've had trouble taxing uplift in land value, which is that people would assume that it would go away, and you'd have a kind of period when nobody would sell their house as they waited for it to go away. The alternative would be to have a higher tax on the value of housing. So instead of 13% or 17.5%, you'd have a higher total tax, which would be equivalent to taxing a part of the imputed income from housing. And as I've said, it's a key part of the way the housing market works in the UK, that the taxation of property that's rented out is very different. You pay tax on the rent that you receive. You pay capital gains tax when you when you sell the property, and that's certainly one of the reasons why we have a concentration of owner occupation as opposed to renting in the UK, because the tax system is distorting decisions. So that was a very, very quick run through some of the issues. I mean, I think the first point to make is it is worth having this discussion about taxation of land, partly because the taxation of property at the moment is just so very suboptimal, and we need to get down to what a kind of efficient system would look like, and then think about what the trade-offs are, rather than where I think we usually start the debate, which is this is the current system and we can't change it because it's all too difficult. As I say, I haven't even started on stamp duty. Seems to me that the case for a land value tax, at least on business and non-residential land, is pretty clear. And hence the case for a really serious look at its implementability at an official or semi-official level, I think is genuinely strong. The taxation of domestic property, well, we kind of all know that basing it on 1991 values in a kind of regressive manner is not great, and the case for, again, changing that is strong, if difficult. Maybe the 21st century will bring change. You know, I suppose one always has to be optimistic, but I suppose if we are learning the lessons of history in 1909 and so on, I guess one wouldn't be desperately optimistic about the prospects for change. Thank you.